Hello, good morning and welcome to Buy Now, Sell Now on ET Now. Let's get a move on with the headlines for this morning, beginning with the fact that Nifty has comfortably tested 11,000. We touched it during pre-open and we're floating with it all day. PSB, IT indices are among the top sectoral gainers and obviously aided this morning by a very strong start from HDFC. However, the top Nifty gainer this morning is not HDFC as many would have thought. It's Brittannia posting a stellar Q1 number as well over the weekend, and now you have a whole host of brokerages coming in with strong upgrades for the stock, and that seems to be leading the rally for them today. Coming down then to HDFC, let's talk a little bit about the quarterly earnings that just for the quarter, and the NPAs have improved as well marginally on a Q-on-Q basis. The bank CEO says successor has been with the bank for 25 years. Moving.
Let's move right on to COVID-related headlines as well after the market-related ones. First up, you have global cases surging past 14.6 million mark. India has recorded a huge spike of 40,425 new cases. PM discusses COVID situation with state CMs. Goa extends the Janata curfew as cases rise. Survey tests taking place to reduce COVID death rate, says UP CM. IMA sounds alarm over community spread. 7 Indian companies in race to develop COVID vaccines. Melbourne mandates compulsory masks. UK PM reluctant on second lockdown. COVID curb suffocated the economy, says Bolsonaro. Back to the markets, then you have the breadth looking fairly even, Stephen. You have SENSEX gaining about 0.7%, a similar quantum of an up move coming in for the Nifty as well. Broader markets outperforming by just a notch, I would say. 0.8% gains coming in for the midcap index. Small cap is up 0.9%. But definitely it's a day when bankings are lending a fair amount of support to the markets. Nifty Bank is up 1.7%. PSU Bank Index is up more than 1% as well. Financial services, NBFCs are also doing very, very well today. But on the flip side, you have a Nifty Pharma down about close to 1%. FMCG witnessing some pressure as well. And Nifty Auto is also the index trading with a slight negative bias. Britannia, top gainer, up 3.5%. You have the likes of HDFC up more than 3%. HDFC Bank, I meant. Infratel is also looking very firm. Coal India is up 2.7%. ICICI Bank is up nearly 3% as well. And like I said, pharma names dragging or rather putting some pressure on the markets. On the flip side, you have Sun Pharma down 2%, Cipla also down 1.5% in trade. Both of our guests are ready, so let's take it across to them, Kunal Bothra as well as Saurabh Jain. Good morning, gentlemen, and welcome aboard. Kunal, what would you say about the market that we're currently trading in? Nifty 10,971. Very close to a very critical mark as well. Which way do you think are we headed from here?
So good morning, Karanya. First of all, I think interesting times for Nifty. Yes, we are on one hand, I think on spot levels, we've already confirmed a break at those 11,000 mark on the Nifty, which is a good psychological break for the index. But then, a couple of data points, which I believe on the short-term trading perspective, they are not into a comfortable zone. So I think today what you're seeing is a bigger move, which was anticipated on Bank Nifty. Last week also we were discussing that how the Bank Nifty could probably try and outperform. So we've seen that move playing out for the index, for this part of the index. But for the Nifty, couple of data points is not interesting, not positive as such. One of them is the put call ratio, and I believe that put call ratio for the Nifty, both on the weekly as well as on the monthly expiry, have now come back into an extremely overbought territory. 1.6, 1.65 is the put call ratio, and that generally results into the index facing a lot of resistance or hurdles at regular intervals. So I think in that regards, the markets could probably witness, or the Nifty could at least witness a lot of resistance from 11,000 to maybe 11,100 kind of level. So maybe longs on the indices as well as on individual stocks would probably take some bit of caution over there. And on the other hand, we've crossed back just about that 200-day moving average as well. Earlier, we've seen the phenomena of many of the stocks which had crossed back about the 200-day moving averages for a day. Post that, they saw sharp correction, and the stocks tend to consolidate near to those averages. So I think in that regards as well, it's possible that the index could go through a bit of a choppy move over the next couple of days. And I think in that regards, maybe a range of 10,800 as a support and closer to 11,100, 150 as a resistance could be a broad support for the index, or broad range for the index over the next few trading sessions.
All right. And Saurabh, hi, good morning. Are you investing in the current market or sitting on the sidelines? And what would be your advice to viewers?
I think a lot of leadership is continuously changing in the market. Probably this time around, the Reliance was the big mover in the market, because of which it helped indices a lot. And I expect that pharmaceutical and IT stocks will lead the rally from here. I mean, even if the market do corrects, but I think the buying momentum will continue in the information technology pack and the pharmaceutical pack, given the results which are coming and given the resilience that these companies are having. What I am skeptical about is the sector like. Lot of sectors are rising. For example, in the metal pack, if for example today PSU banks are doing quite a good, but I think the balance sheets are quite problematic, and the NP situation is getting worrisome, because if you look at the previous 6-8 quarters, the growth was even dipping, and these banks were finding it difficult to manage the NPAs. And with the lockdown and the COVID situation, I think it would be very difficult for these banks to manage their balance sheets. So I'm hopeful. I would continue to be buyer on the information technology pack and the pharmaceutical pack selectively.
So much for giving us that. Just stick on, because you were just talking about pharma, and our first query, ironically, is from a viewer who's trying to play the pharma sector in two ways, right? So we have Nageswar Rao Anavaparu, who's writing to us from Bangalore. And he wants to know good levels to enter AstraZeneca, and then he wants to know good levels to enter GMM Pfaudler. So he wants to pick up on the manufacturing side, because GMM has 50% manufacturing business coming in for glass-lined from pharma, and then obviously AstraZeneca needs no introduction. So what would your advice be on these two stocks, and where are the comfortable entry points?
Difficult for me to give the entry points, but one thing is about AstraZeneca. If you look at the the revenue composition, the company earns about 200 crore worth of revenues with approximately 10% EBITDA margin, and the valuation it carries, it is approximately 23 times to book multiples, and trailing P is approximately 116. So I'm not very comfortable with the kind of valuation that AstraZeneca enjoys, but historically they have got such a premium. Instead of AstraZeneca, I would recommend to go for a company like Alchem Laboratories, which is putting up a very good show, and growing at a pace of more than 40%. For example, Alchem Laboratories looks very good to me. If you look at their domestic business and the international business, they are growing above the Indian pharmaceutical industry growth rate. In fact, they are getting regular approvals of the ANDA. What the target we are suggesting to our clients is approximately 2,800. In the mid-cap category, I think granules have done a bit, the stock has run up, but the the story continues to be promising. So I would instead invest instead of AstraZeneca Pharma, you can go ahead with the companies like Alchem Laboratories, or maybe Alchem Laboratories, Alembic Pharmaceutical, Alchem Pharma, or Granules. The other company, the GM Fodler, I think these companies continues to post a good show. The company doesn't have any kind of an impact with respect to the lockdown which we are witnessing, and I think that is why I think the stock has not beaten down anyway. It is a outperformer stock. I think you can continue to hold GM Fodler.
Okay, Kunal, how are you looking into the charts of AstraZeneca? The stock touched a 52-week high as well quite recently. Do you think one should look at buying it at 3390, 3400 levels, or should they wait for some relief or some kind of a dip to come by in the stock price?
So I think both these charts, AstraZeneca as well as GMM Fodler, I think both these stocks, first of all, they are slight illiquid. Illiquid in the sense the daily average volumes traded into these stocks is relatively low, into just few thousands itself. So that's the only catch to these stocks. But then when you look at the chart patterns, both these stocks, they particularly are very strong kind of names. They've not gone through very tough or very rough volatility, even in the last 5-6 months as well, when the markets had gone through a sharp corrective phase in the month of February and March. What these stocks had done is that these stocks had come back to their 200 moving averages. So that's a completion of a mean reversion phase, and then from there on, the stocks bounce back, restart, and recontinue their previous uptrend. So the charts on the longer term basis are quite attractive. Now, generally, I believe that you should probably have two entry points over here. First one is the 50-day moving average, where both these stocks, GMM Fodler as well as AstraZeneca, both of these stocks are just about trading exactly or very close to their 50 DMAs. So if you're looking to buy, I would suggest that you should buy in two tranches. First should be at current levels, where these stocks are trading exactly at the 50-day moving average. And the second, if these stocks come back and try to touch back their 200 moving average, when that would happen would be difficult to anticipate. But if these stocks go through maybe another 5, 6, 7% kind of a correction, they could come very close to their long-term averages. I think that should be another entry point where you should look to average, because looking at the long-term chart patterns, looking at the way the trends have shaped up, generally indicates that the stocks tend to hug back and come back to their 200 moving averages and recontinue their uptrend. So both these entry points could be crucial entry points for the two stocks which you've asked for.
Okay, well, that's the verdict on AstraZeneca and GMM Fodler. Let's move on to our query number 2. Arjun Pathak from Delhi writes to us, wants our experts to suggest a long-term call on Varun Beverages. Kunal, I'll come to you first on Varun Beverages. It has seen a steady up move since since the entire pandemic and issues related to it really played out. So right now trading at 710, should one sort of look at lapping it up here at these levels and perhaps stay put for the long haul?
I think you should. I think if the investor is particularly looking at it from a longer term view on Varun Beverages, then he can look to buy the stock at current levels. Even though the price history is a bit limited, it's only maybe 3.5, 4 years of price history. But still, looking at the way the stock has shaped up, the recent bout of volatility, just few months back, and this resurgence or the comeback into the stock price, it indicates that the stock is trying to restart a new trend. It's getting it's getting a lot of support from volumes as well. So I think if I'm not wrong, the average volumes for last month for Varun Beverages was almost maybe 1.5 times the average before that, and the volumes were almost at a 5-month high for the previous month, and the stock had also done quite reasonably well previous month as well. So there's volumes which are trying to pick up pace for Varun Beverages, and the prices are moving in a synchronized manner of price uptrend. So I think in that regards, it could be a good long-term bet. Particularly, I think at current levels 700, 710, where the stock is trading, is where you should look to start buying or looking to add the stock. And if the stock provides any kind of opportune dips coming back to its key moving averages, I think that should be taken as an opportunity to average further.
Okay, thanks for that, Kunal. And Saurabh, let's come to you. Do you have a view on this stock?
Beverages, it is the second largest franchise of the PepsiCo outside US. It's into the carbonated and non-carbonated beverages. The business has a seasonal nature. 40% of the revenues comes in the June quarter. The company posted up a good show for the March quarter. They have posted approximately 50% growth in the profitability. But I am really skeptical about what will happen in the June quarter because of this lockdown. Restaurants are closed. Public places are closed, no events are happening, cinema halls are closed. So I think it would be really difficult for the company to make up for the losses revenue which is happening right now. In my opinion, I think this year would be bad for the company. I mean, they will witness degrowth because 6 months of the from April to September is the good period for the company, and June quarter we have seen what is happening, and there is no scene which is looking that public places will get open up and new people will go and buy, because the products of the company falls into the discretionary buying. So I'm little skeptical that spending will happen for the company's product. So my take would be a little negative. In my opinion, it is better to come out of the stock. Instead, you can have a look on the agrochemicals stocks like UPL or maybe Chambal Fertilizer.
Okay, Saurabh, thanks for that. And with that, I think we're done with our queries for this morning. So a big thank you to both you gentlemen, Kunal and Saurabh, for joining in as always. And we look forward to chatting with you in the near future. With that being said, let's now get a move on. I'm just going to give you a little review of what happened with the HDFC Bank Q1 numbers, which are out during the weekend. And if the price doesn't tell you enough of what the investors really liked about the result, it really outperformed on every single line item, whether it be NII or profit. It blew past our estimates by around 5%. There was 5% PBT growth this quarter. So people who are attributing the higher profit to a lower tax rate can take a look at that figure and be assured that there's been growth pre-tax as well. Mind you, all this is happening despite significantly higher provisions, including floating and contingent. There was 4,000 crore provision this quarter. So it's been quite a good show from them. The NIMs also beat street expectations, coming in at 4.3 versus analyst estimates of 4.2. So profitability has also been maintained. There's successor, looks like it's going to be coming from within the bank. Aditya Puri at the AGM said that the current successor who they've proposed has been working with the bank for 25 years. So that should also ease investor concerns about succession planning. Finally, coming to moratorium at HDFC Bank, they weren't reported at first when the numbers came out, and some investors panicked that why aren't they showing this number? But then shortly after in the AGM, Mr. Puri disclosed that it stands at 9%, which I believe is one of the lowest in the industry. So strong comeback or strong show from them, whatever you want to call it. And I don't know if you're paying attention to some of the other banking stocks, but they all seem quite activated and energized by this strong show from HDFC this quarter. Let's slip into a quick break here now on Buy Now, Sell Now. Plenty lined up when we come back.